Welcome back, everyone. The next module, Convergence to International Financial Reporting Standards, otherwise known as IFRS. I believe you might have heard about the term IFRS or International Financial Reporting Standards previously. So before we dig deep into this module, we need to understand some basic aspects relating to the same topic. We all know every company prepares financial statements that is mandatory as per the Companies Act of our country, and every concern prepare financial statements to identify the position of the business as well as the performance of the business. For example, from the preparation of final accounts, the company can identify whether the business is earning profit or loss. And from the balance sheet, the company can identify the position of the business, how much was the liabilities and how much the amount has been spent in assets. So why they are preparing these financial statements? So basically, we all say that they are mandatory, or the business need to identify whether the business is earning profit or loss, or what is the position of the business. Whenever such a question comes, why we have to prepare financial statements, we all answer like that: to know the statements or position, to know the performance, or we will say it is mandatory as per the Companies Act. Apart from that, are there any other requirements or need for preparation of financial statements? Yes, there are many needs, and one such need is communication. So what is meant by communication? Communication means, from the subject point of view here, communicating means communicating the financial information to the users. So there comes another term. What is meant by users? We have learned about the term users in the smaller classes. Users in accounting are mainly two categories: internal users as well as external users. Internal users, we all know, it will be the managers or whoever within the boundaries of the business. Within the boundaries of the business, it will be the managers or the management or workers, employees, anyone who is working within the organization. That is known as internal users. They need information about the financial status of the concern. We all know. Whereas external users is all those parties outside the boundary of the business, that mainly include creditors, lenders, financial institutions, government, like that. So one of the main purpose of preparation of financial statements is to communicate the information to the external users. So that is known as financial reporting. So financial reporting is a communication of financial information of an enterprise to the external world. It is a process of producing statements that disclose an organization's financial status to management, investors, and their shareholders. They are known as the users. And the whole purpose or the whole activity is termed as corporate financial reporting. If we are reporting the financial status of a corporate concern, that is known as corporate financial reporting. That is one of the main purpose of preparation of financial statements. So let us go deep into that. In this module, we will be learning the concept of what is meant by reporting, what is financial reporting, what is the need and purpose of the financial reporting, how can we conduct financial reporting, or how can we convey financial reporting. You can't simply communicate the details of the financial statement to someone, and we can't say like that it is known as corporate financial reporting. There are certain rules, regulations, and what are the objectives that can be achieved from financial reporting. So in this module, you will study in detail various standards set by various international organizations as well as national organizations. So let us go deep into this area. convergence to international financial reporting standards. The term convergence means try to become as same as possible. In the world, there is a certain set of standards that is known as International Financial Reporting Standards, or IFRS, globally accepted standards. So in order to maintain a uniformity in all the aspects of accounting all over the world, every country or every standard setting organizations of each country try to maintain a convergence to IFRS. Convergence means trying to make their standards similar to the standards set by IFRS. So that is the meaning of convergence. How can we attain this convergence? How the various organizations and various communities are taking necessary steps to become converged with the IFRS? Because only through uniformity we can maintain a comparison or communication with all the accounting practices practiced all over the world. So we need a uniformity. For that purpose, convergence is going to be applicable. So let us dig in detail what are the aspects we are going to learn in this module. Corporate financial reporting. Financial reporting simply means communicating the financial information to the external users. When these informations are relating to a firm or a company or a corporate, in the today's business world we are using the term corporate instead of company or a firm. So corporate financial reporting. Financial reporting is the communication of financial information of an enterprise to the external world. It is a process of producing statements that disclose an organization's financial status to management, investors, and their shareholders. Because all these persons are liable to know what is the condition of the business. Because they are spending their hard-earned money in the business. So they have the right to know the composition or the condition of the business, and it can be known through financial reporting. Corporate financial reporting is a series of activities that allows companies to record operating data and report accurate accounting statements at the end of each period. It may be monthly report, or it may be quarterly report, or it may be yearly report. These reports are communicated to these users, internal and external users. So what is the steps that has to be followed in order to conduct a financial reporting activity? So financial reporting process includes mainly 4 steps. First one, perception. After that we are going for analysis of perceived activities. So what is meant by perception? Perception means awareness about something. So in a corporate concern, what is the meaning of perception with regard to financial reporting? Means perception of the significant activity of that concern or an accounting entity. What is happening in that organization? What kind of business they are doing? Whether it is a goods industry or a service industry, or what is the nature of the activity happening in that business? That is known as perception. So for the financial reporting process, there should be a proper perception about the business or the corporate concern. Once the perception of the concern or the awareness regarding what is happening in that organization is obtained, next is symbolizing the perceived activities in such a manner that a database of the activities is available that can be analyzed to understand the relationship between perceived activities. That is a second step, analysis of perceived activities. In the first step, we have the idea that what is happening in the business. Next means what are the activities that is going on in the business? What is the relation between the various activities in the business? It will be properly analyzed and it will be properly recorded. For example, if a company, there will be different departments, each departments will be having different heads, and all these are coordinated and working for the ultimate objective of the concern. So there is a coordinated activity regarding each departments within the organization. So they have an idea about what all activities are going on in the business. Once the perception and analysis of the perceived activities going on in the business is known, next is summarize the interrelationship among activities. In every accounting activity there will be summarization. Summarization means studying or analyzing the activities of the business and interpreting it. In summarize, in the interrelationship among activities means analyzing the model of activity in order to summarize the interrelationship among activities and to provide a status picture or map of the entity. As I mentioned earlier, in the second step, we have mentioned that there are in the company there will be different departments. They will be working with their within their objectives. Every department will have its own objectives, and overall the concern will have a common objective. And here summarizing interrelationship between, we know that there will be purchase department and there will be process department or manufacturing department. Are they related? Yes, they are related, because purchase department will purchase raw materials for the concern, and these are transferred to the next department, that is the manufacturing. They will acquire the material from the purchase department and process it and prepare the finished goods. So here summarizing the interrelationship among activities means what are the departments or what are the activities that is going on within the business? Are they interrelated? What is the connection between these activities? That is studied in the third process. Once all these activities, all these steps, 1, 2, 3, all these 3 steps are properly conducted, the final step is communication. That is the most important one in this module point of view. Communication of the analysis to users of the accounting products to guide their decision makers in directing future activities of the entity or in changing their relationship with the entity. Here communication means communicating the information to the internal users as well as external users. Internal users, why the internal users need information? Because they need to take decisions. On the basis of the present financial position only the company can take decisions for the future. Because if the business is running at a loss, how can the company can decide regarding future investments in different areas? So in order to take decisions, internal users need accounting information. So what is with external users? Why they need information? Because external users are the persons, they invest their hard-earned money in the business. So they have the right to know what is the position of the business, whether they will get returns for their hard-earned money invested in the business. So for that they also need information of the financial status. So all these combined the process of financial reporting. And here the first 2 steps, perception as well as analysis of perceived activity, these 2 steps actually relating to the accounting measurement, because here perception means identifying what are the activities that are happening in the business. Analysis of perceived activity means what are the activities that is happening in the business, and they are recorded with regard to accounting measurements. If any transaction that relating to any of the departments is expressed in financial terms, it will be recorded. That is another simple meaning of analysis of perceived activities. So once these 2 steps are completed, the following steps will be followed. These actually represents the disclosure process of the entire activity. Disclosure means communicating the information relating to the financial status of the business to the internal users as well as external users. So all these are relating to the process regarding financial reporting. Next is, what is the objectives of financial reporting? First one, provides information to present and potential investors. Present investors and potential investors means, present investors mean the current investors. There will be persons who have already invested in the business. Potential investors means who are going to invest their money in the business in future. Right, at present they are not invested, they have not invested in the business, but in future they will invest. But for in the future, if they have to invest, what they need? They need information about the company, and it can be provided through financial reporting. So that is the first one, provide information to present and potential investors. The financial reporting should provide information that is useful to present and potential investors and creditors and other users in making rational investment, credit and similar decisions. Next one, provide informations to investors and creditors. We have mentioned that provide information to present and potential investors, and these present and potential investors already includes these investors and creditors. Then why there is again another point, provide information to investors and creditors? That means the financial reporting should provide information to help investors and creditors and other similar type of users to access the amount. What is the timing and what are the uncertainties of the net cash inflows relating to the company? These investors and creditors, they are very much concerned about their money invested in business. So they need information regarding what is the timing of returns of the concern, whether the company is able to earn more cash, or they are able to maintain the frequency of the cash inflows, and many other informations like that, because they are very concerned about their hard-earned money, these investors and creditors. So financial reporting will provide information that is required by investors and creditors with regard to cash inflows, because these persons are very much concerned with the cash inflows of the concerns. Next one, provide information about economic resources. Here economic resources in the sense, what are the sources from which the company is going to get funds or collect funds. So every financial reporting should provide information about the economic resources of an enterprise, how they are going to claim those resources, and how it is going to affect the transactions and events and circumstances that change the resources and claim to those resources. Because if a concern doesn't have a strong economic resource, then it will be difficult for that concern to raise funds or going to run a profitable business like that. So if the concern doesn't have an economic resource, no one will invest in their business. And where can we get such information? From the user's point of view, from the external point of view, external users point of view, they need such information, whether the business is having proper economic resources or strong economic resources. Such information can be obtained from financial reporting, because investing in those concerned having strong economic resources is acceptable by the investors. Next one, furnish information about financial performance. We have mentioned in the beginning that one of the purpose of preparation of financial statements and communicating those statements details is to know the performance of the business. A business prepare financial statements to know the performance as well as position. Performance means whether the organization is earning sufficient profit or loss. It can be obtained by financial statement, especially the statement of trading profit and loss account. And such information has to be communicated to the users. And financial reporting helps in ensuring the communication of information regarding the performance of the organization to its users. Next one, provide information regarding earnings and its components. Every financial reporting should provide information about an enterprise's performance provided by measuring of earnings and its components. Earnings and its components means what is the returns of the concern or revenue of the concern, and from what all sources the concern is earning such revenues or incomes. And such information should be properly provided via financial reporting system. Financial reporting should provide information about sources and application of funds. Every business need funds to run the business, and the company must identify different sources for such funds, and not only that, the company must properly utilize those funds. That is the meaning of sources and application of funds. And every financial reporting system should provide information about how the organization or how the company obtains those funds and how they utilize or spend those cash or funds. We use the term cash and funds synonymously, even though somewhat in general sense it remains the same, but if you are going in deep, the cash and funds is quite different. But in colloquially we used to use the term cash and funds. And sources, for example, sources means if the company might have borrowed funds from creditors or lenders or financial institutions, that is then known as sources. And application means the company might have used those funds or cash to invest in fixed assets or capital assets, like that. So that is known as sources and application of funds. And financial reporting should provide information regarding what are the sources from which the business has obtained cash or funds, and for what all purposes the company has utilized those funds is known as sources and application. Such information should be provided by the financial reporting. The financial reporting should provide information about capital transactions. Means the financial reporting should provide information about its capital transactions, including cash dividends and other distribution of enterprises resources to owners. Next one, provide information about liquidity and solvency. Here the term liquidity and solvency, you will study in detail the concept of liquidity and solvency in your further classes. Anyway, liquidity means the ability of a concern to raise cash or raise funds. That is known as liquidity. The ability. Some concern have the ability to raise cash quickly. Some may not have that much sweetness regarding how to raise cash or funds. Anyway, liquidity is the ability of the concern to raise funds, how quickly they can raise funds. Solvency means how to repay the debts. That is known as solvency. Whether the company has the solvency means whether the company has the ability to repay its liabilities or debt. That is known as solvency. So the financial reporting should provide information about the solvency as well as liquidity of the concern. Next one, provide information about discharge of responsibility. Every financial reporting should provide information about how the management of an enterprise has discharged or fulfilled their responsibility. To whom? Their responsibility to the owners of the concern, regarding how the enterprise has properly utilized the resources entrusted to them. In a concern, there will be owners and the activities will be run by the top management, and it is the responsibility of the management that the resources entrusted to them, that is resources provided to the management by the owners, whether the management has properly utilized those resources, and such information should be provided by the financial reporting. And finally, provide information that helps managers and directors in taking decisions. That is the most important requirement from the financial reporting point of view. That is, financial reporting should provide information that is useful to managers and directors in making decisions in the interest of the owners, not only owners, from the point of view of the company also. it should be beneficial to every users relating to the company. So in order to make a proper information, the managers or the directors or whoever taking the decision need proper information. Such information is provided to them through financial reporting. So that is the purpose of financial reporting in an organization point of view. So how the organization can effectively implement financial reporting? There are many organizations that is running all around the world, and there are many organizations that is working in different parts of the country. And how this financial reporting is possible in all these organizations that is running all around the world. We will learn about how the financial reporting take place uniformly all around the world in detail in the next session. Until then, go through all these aspects. We will discuss about further aspects relating to the financial reporting as well as the convergence to IFRS in the coming sessions.